Iris, and today we're going to talk about the expectations the market has for the next week and how will the June US retail sales rate affect the economic resilience. The biggest focus this week is June retail sales month-to-month, an important component of the consumer spending. Agencies forecast that last week's retail sales monthly rate is expected to accelerate slightly to 0.5%, indicating that the U.S. household consumption trend remains healthy heading into the height of summer. At the same time, a number of real estate data will be released, including indicators such as new housing starts, construction permits, and existing home sales. And the U.S. housing market has recently shown some initial signs of recovery that could be a factor influencing the Fed's decision. The New York Fed and Philadelphia Fed Manufacturing Index will be released in July, which is expected to continue to be contraction territory. And then we're going to talk about crude oil. Crude oil futures posted their best two-week performance since April, boosted by production cuts and a weaker dollar. International Energy Agency Administrator Beryl said last week that the oil price market is likely to be tight in the second half of the year, and since the demand for oil from developing countries is expected to remain strong. The WTI front-month contract rose 2.11% to 75.42 a barrel, and the Brent front-month contract rose 1.78% to 79.87 a barrel. Stephanus, a partner at SBI Asset Management, was slightly surprised by the trend in oil prices last week as U.S. crude oil inventories rose more than expected. There is uncertainty as to when the supply crunch in the oil market will occur after major oil producers cut production. What we're seeing is cuts, but it's not clear whether there are a lot of oil barrels that we cannot see, he said. The dollar index fell more than 2% last week, falling to its lowest level since April. Chief market analyst at the Xfinity Group said the gold was bolstered by the Fed's prospect of ending its interest rate hikes. If the Fed confirms that the July rate hike will be the last of the cycle, spot gold would return to the key psychological mark of $2,000 by the end of the month, he said. And then we're going to talk about the European Central Bank's interest rate decisions. The minutes of the ECB meeting released last week shows that there was not enough evidence that the core inflation has reached an inflection point. With the exception of energy, price growth remains strong. Core inflation is stubborn and continues to be higher than expected, suggesting that inflation is more persistent. Moreover, wage growth are increasingly becoming an important source of inflation. The ECB believes that the European economic outlook remains highly uncertain, with the weak manufacturing that could spill over into the services sector in the coming months. This month's ECB decision is 2 weeks away. ECB President Christine Lagarde's speech at the ECB meeting in Frankfurt on Monday will be in focus, and with hopes to better understand when the ECB is heading for the end of its tightening cycle. The Bank of England said last week that all 8 large banks have passed the latest stress test and that these financial institutions would have enough capital to continue lend to cope with the economic pressures such as collapse in the housing market, soaring unemployment, and interest rate as high as 6%. In a statement, the BOE said the UK banking system has the ability to support households and businesses during periods of rising interest rates, even if economic and financial conditions will be much tougher than expected. GBP USD broke the 1.30 mark last week to hit a 50-month high. The latest inflation report in the UK this week is expected to fall back to 8.2% in June and remain at 7.1% in core inflation. If the data exceeds expectation, it will undoubtedly put pressure on policy decisions in early August, and the Bank of England may be forced to choose raising interest rates by 50 basis points. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.